Hello everyone, Mr. Stevens here. This will be our last lesson in our earning and managing money unit. And what we're going to be talking about is actually calculating tax that you owe. We're going to be looking at tax tables that tell us the tax rate for different income brackets and working out that based on someone's income, how much tax do they owe. Something we also need to talk about in the course of this lesson is something called the Medicare levy. We're going to investigate exactly what that is. So you may have heard these terms before, mainly probably this one, tax refund. Basically what happens is because as we looked at in our last lesson, it's very common for your employer to take tax out of your pay before you receive it. That means by the time you get to the end of the financial year and you have to reconcile your tax for the year, you have likely paid more than you are required to. Your tax paid is probably bigger than the tax that you are required to pay. So if this one is bigger, you're going to be ending up with a tax refund. If you haven't paid enough tax for the year, so your tax payable is bigger than the tax that you have paid over the year, you actually are going to have some tax owing. You're going to have a bill. This is something we need to become very familiar with and very comfortable reading. This is a tax table. It tells us how much tax a person owes based on their income. So, let's just go through it. This first row here, 0 to 18,200, the tax on this income is nil. You pay zero tax on any income up to 18,200. Now, if you look at one of these tables from, say, 10 years ago, this figure here will be significantly different. Because there was a time, I don't remember exactly what year it was, but quite a few years ago, there was a time where this figure was basically doubled. And even if you look at one of these tax tables from 2 or 3 years ago, you will notice that the numbers on it are a lot different. This tax table here on this slide, I have taken from the Australian Tax Office. The ones that you'll see in your textbook are actually a little bit older than this, so the numbers will be slightly different. Okay, let's look through it now. If your income falls between this range, you pay 19 cents for every dollar over 18,200. So for example, if you earned $20,000 in the year, you would only pay this 19 cents on the $1,800 that were over this amount. Now, if your tax falls into the next bracket, you completely disregard the ones that came before, because you pay this flat amount which counts for the previous row. Okay? This $5,000 is if you had paid 19 cents on your first $45,000. All right, so let's say your income is $60,000. You pay this flat amount, plus you then pay $32,000 for every dollar over 45,000. And the story is the same as we get up the higher brackets. If your income falls between 120,000 and 180,000, you pay this flat amount, which covers your first $120,000, and then every dollar over that, you pay 37 cents for each one. Excuse me. And then if you earn anything over 180,000, you pay this flat amount, which covers, again, your first $180,000, and you pay 45 cents for each dollar over that. Let's have a go at doing some of these calculations. If you have a taxable income of $25,000 and you have paid $1,650 in pay-as-you-go tax, what would be her refund? Well, the first thing we need to do is calculate her taxable income on $25,000. Now, if you're looking at this example actually won't be any different, but if you're looking at the later examples in the textbook, the numbers are going to be slightly different because, like I mentioned, they are using an older tax table. I am going to use an up-to-date one. But for this first row, it actually doesn't make a difference because this question won't be affected. All right, we have to calculate her tax payable. How much tax does she owe on her income of $25,000? Well, let's go to the table. Her income of $25,000 falls in this bracket. So we need to work out how much of her income is over 18,200. And then we need to multiply that by 19 cents because for every one of these dollars that's over 18,200, she pays 19 cents. And if you stick that into your calculator, you'll see that she pays 129. Oh, I can't write properly. $129. Sorry, $1,292. But she is paid $1,650, so she's actually going to get a tax refund. Her refund is the amount of tax that she's paid minus the amount of tax that she owes, which is $350. All right, this is going to get a little bit more complicated here. Joel has a taxable income of $200,000, and so far he's paid $65,300. Well, what is the tax he's required to pay? Let's look. His income puts him in this final bracket. I'm just going to erase all of this stuff so we can read this properly. His income puts him in the final bracket. So that means he pays a flat rate of $51,667. Sorry. He pays this flat amount. And then for every dollar over 180,000, he pays 45 cents. So this next part of the calculation is going to be the same as our first one. Sorry, that's just 180,000. And he pays 45 cents. That's completely not right, sorry. 0.45, that's what I was trying to write. And if you put this into your calculator, you get $60,667. Now, does he have to pay a tax bill or does he get a refund? He gets a refund. Why? He's paid more tax than he is required to. what percentage of his income is paid as tax? This is an interesting one that you may sometimes get asked. And it's fairly simple to calculate. Think about when you're trying to calculate the percentage you got on your test. You divide the mark you actually got by the total marks, and then you times it by 100 to find out what percentage of his income is paid as tax. We divide the amount that he paid by the total, and then times it by 100. So he's paid 30.33% of his income as tax. Okay, the last thing we need to talk about is the Medicare levy. This is something that we have in Australia that helps the government pay for Medicare, pay for our public health system. If you don't have private health insurance, you can also pay an additional amount to the Medicare levy, which depends on your income. So everyone pays this, the Medicare levy, but you can also pay a surcharge depending on your income. But again, the way we calculate this is just a percentage. And we've done plenty of these so far. Remember, we put it in as a decimal, we times it by the amount. And that one just goes into our calculator. And it comes out as $1,812. So I got a bunch of questions here for you guys to practice. Now, typically, this is a kind of difficult lesson for people, interpreting tax tables. So I would really like it if you're struggling with any of these questions to come and let me know, and I'll be happy to go through them in more detail. Thanks, guys.